Good evening, everyone, and welcome to the session today. Today is just as we have started this series of webinars this month, and today is, I think, fifth or sixth session. We started these sessions on 2nd of September, and the series of webinars. This is called the Ultimate Webinars. This is powered by Century Financial, and we present to you 21 days of different topics, 21 days of um, trading, 21 days of understanding how financial markets work. My name is Yogesh, and today we are here to understand how to trade in the live market. We'll also go through the live platform to understand that how the trading works. And today, the entire idea of conducting this session is going to be to make you aware about how markets move, how you can actually use um, these kind of platforms, and we are going to go through a bit of terminologies, and then we'll take you through some products which you can also see and see how they have moved today. We'll try to understand what kind of commodities or currencies or indices you can trade in on daily basis, what sort of durations you can trade on daily basis. And please understand today, whatever trades we are going to place or whatever research we are going to talk about, all this information is for um, only and only this particular session. I would only encourage you to place these trades in a demo account, which is not live, which does not involve real money. Because today, the whole point of understanding this session is to prepare yourself for trading also, but at the same time, um, every day is different. Whatever trades we place in the market, it depends on day-to-day trends, which changes minute on minute, which changes hour on hour. And if you need to place trades live, first I would suggest understand the kind of discipline it needs, understand how this process works, and then do talk to your risk experts, do speak with your investment consultants, and only then place trades in the live account. And this is something which is very important. So today, whatever trades we are going to place in no manner, it is a recommendation to trade in your live accounts. Please just take these trades in your dummy accounts or in your practice accounts just to see the impact of how it works, right? Um, we also need to keep ourselves updated about the information. A lot of things have happened in last 1 week, so we are going to understand the trend. Meanwhile, please try if you can use your chat options. If you can see my uh, presentation, and if you can see, if you can hear my voice, you can see my presentation. Just try to send yes or no, so I would be able to change a few things. It's really important for me to make sure that everything goes seamless in this presentation. Right. Just try a small Q&A option must be given on the side of your chat window. And if you're able to send me something or write something over there, we'll be able to go through this. Perfect. I've started getting a few yeses already. Just in case, if you feel that you have missed out on something, a copy of this session will be put on YouTube, and you can definitely go and view that. And we'll also try to keep you posted with all the live updates. So, talking about live updates, it's really important that we must know what has been going on in the financial markets. We're going to talk about margin trading, we're going to talk about short selling, we are going to talk about leverage based trading also, just to understand that how these things work. But let's get an idea of what has been going on in the markets, because as of now, as we speak, there are a lot of things which have occurred today. The market has moved. I mean, I wouldn't say crazy, but I mean this is something which is very usual. That is something happens very often. Today, every day, there's a lot of fluctuations in the market. and it's something which we have to keep ourselves updated all the time. Um, just today itself, if we see, if we talk about Chinese exports, for example, so we have observed um, Chinese exports and imports both have shown a slight increase. Chinese exports have gone up by 6.9%. Imports have gone up by 4.7%. And this is one of the important news also, because the Chinese exports show the manufacturing. And if the manufacturing is strong enough, that keep pushing oil prices higher. If it is weak, we have seen oil prices coming down off lately in the last 1 week. Again, there have been a lot of information which is expected to come. The inflation outlook for US households have changed a little last month, and there have been a lot of price pressures, but it has been sort of easing in last 1 month. Apple event happened. The new iPhone 16 has been launched, which will cost between $800 to $1,200 in US. And the anticipated price hike for Apple's new iPhone 16 lineup, hoped for by the company shareholders, it did not happen. But Tim Cook is clearly banking on increasing sales volumes without raising the prices. So initially, the Apple shares fell down by 1% during the presentation, but by the end of the day, they ended flat, very break even, not much movement expected. This is something which we have observed in Apple events most of the time. Uh, the moment it starts, we see Apple shares actually coming down, and then by the end of the event, it mostly ends flat. Um, that happened yesterday. And then information news about Boeing. Boeing has agreed to a 25% wage increase for workers to avoid a major strike. And it's a first full labor agreement in 16 years, and this will include pension benefits, and it will give the union more influence over safety and quality in the production process. So after this, the Boeing shares went up by 3%. So why I'm sharing this with you guys, because these are some important news and information about uh, companies, about markets, which also kind of shapes up the whole day. So you need to be aware about if a stock is going up, why it's going up, if it's coming down, why it's coming down. Sometimes it's market pressure. Sometimes the stock has been going higher for a long period of time, so traders try to book profit, and that's important in day trading. The crypto market cap has fallen down 13% in the month of August, and that was mostly because of I think people have started investing more in stocks, or maybe the recession fears have intensified. So people have taken money out of the riskier assets like cryptos and started putting money into bonds or gold, for example. And then there's an Italian luxury footwear group called Golden Goose, which has reported a 12% rise in earnings. And this is something also from a different market, is what we are getting. Citibank expects a 20% increase in the investment banking fees in Q3. And these kind of news are very important, guys. And as I said, for example, if you see Oracle stock today, Oracle's cloud growth has become has actually made this stock again one of the Wall Street's next AI favorite, because cloud computing has been one of the first sectors to see a noticeable boost from AI. If you see Oracle's quarterly results, which came yesterday, it suggests that this trend is likely to continue. And that's why Oracle today is in the winning seat and could be the next AI favorite. So keep a check on the Oracle stock from your end. There's news about helium, as helium demand is expected to double by 2035, and it will be driven by a chip production boom. And helium is widely used in manufacturing because of its cooling and inertia properties. And demand for helium could exceed 322 million cubic meters by 2035. So the global semiconductor market is expected to grow by 13% this year. And because AI is increasing, and that is why the demand for helium can also increase. So keep a check on that. And more and more, we have also looked at the today is one of the important sessions also about the presidential debate. Today is the second presidential debate, and it might also give a lot of uh, information about who is going to be the next president, because this is important. It happens a lot of times when the presidential debates actually are somewhat deciders to see that who's going to be winning the election. And today is the second one. This could be the more important because in the first presidential debate, it was Joe Biden and Donald Trump. But in the second presidential debate, it's going to be Kamala Harris and Donald Trump. And it's going to be very interesting to see the what sort of showdown, because it's going to be very intense. And they're going to be debating for the first time since Kamala Harris became the Democrat nominee. And they're going to be talking about important issues like abortion, immigration, the border, again, legalizing marijuana for medical use, or a federal legalization. And also, they are going to be talking about inflation, how the Trump's focus is on the cost of energy. Kamala Harris mostly acknowledges the rising prices. They're also going to talk about foreign policies related to Gaza, where Donald Trump's stance is very clear to end violence. Kamala Harris is pushing for a ceasefire and a hostage release. So these kind of topics are also important. We have seen a slight increase in the gold prices today. So we are going to understand why the gold prices are going up, or what, if I see a fundamental reason. Gold has been trading steadily around 2500 levels, right, between 2485 to 2530 in last 16 sessions, if we see. And we are going to see this chart through which we are going to see an understanding of how gold has moved. So if I see the average range of gold, earlier it was around $42 over a day. Now it has reduced to $29, $30 in a. So this is something which happens a lot of times, where there is a slight decrease in the volatility and sometimes it starts increasing again. But it will definitely make a sense once we see a few important news coming out. And today, Apple shares were down 1%. Huawei has debuted with a trifold smartphone, and it was just hours after the new iPhone launch. So do look out for that. I think that is something which is also very interesting. And Apple also lost the European Union court battle over 13 billion euros tax bill in Ireland. So now they have to pay, which is also an important factor over here. So most important news which is coming right now is about the US oil prices. Crude oil prices, if you see, we saw that it ended slightly higher as the tropical storm Francine threatened the Gulf operations. Right now, as we speak, there is a 4%, 3 to 4% decline which has occurred in crude oil today. And it has come down a lot. Even if you see in the commodity sector, platinum is set for a record deficit right now. If you see the stock futures today, they're slightly on the downside, and we'll go through the live platform to see that how markets have performed. So that being said, as I said, guys, again, it's really important to be updated with the markets. Now, today we are going to talk about the important part of how to place a trade. And this is something which is really important, because placing a trade is one of those things which seems not that complicated. It's very easy. The point is, when you're placing a trade, you're always thinking about what's going to happen next. And that's where trading in a live account and trading in a demo account is different. How many of you have sometimes opened a demo account and started trading and realized that you're really good in trading because you're making a lot of money? And that is something which we all of us face, because trading in demo account is a piece of cake. It's very easy. It's not that difficult, because there are no emotions attached to trading in a demo account. But when it comes to trading in a live account, I'm sure the feelings are different. If you're trading in a live account, you know that there is a possibility that you might end up on the wrong side of the trade. There's the possibility that the trade which you have placed, your stop loss might get hit, or you might not be able to book the profit. All of these things, it definitely impacts your trading decision. Emotions. We did a session on investor psychology just to understand how to control our emotions, and I talked about how you can maintain a trading journal. But most importantly, also, as we speak about understanding the trading, we should know the risk part of it. Every online trading platform has the option to trade on margins. In fact, most of the online trading platforms which are trading in derivatives, in gold, index, commodities, currencies, cryptos, all of them, all of these platforms, most of them, they are providing margin based trading or leverage based trading facilities. How margin trading actually works? The margin trading allows you to place a trade uh, in your trading account by depositing only a percentage of the total trade value. So if you want to trade worth $50,000, it does not matter how much money is there in your account. You want to place a trade with 50,000, and if your broker is allowing you to take 100 times leverage, all you need to do is just use 1%, pay 1%, and you can place a trade in that much position. So if you were to place a trade worth $50,000, all you need in your trading account is just $500, and you will still be able to buy stuff worth 50,000. Look at the diagram right now, which you see. Imagine you have put $500 as a deposit in your trading account. You want to buy something worth $50,000. Look at the right bag in this chart, which is bigger one, which says buying power. You can actually buy something worth $50,000 by using a very small deposit. And this is called leveraging your portfolio. And it's very simple. You have used $500 to take a trade worth 50,000. The moment your loss reaches 50% of the money which you have deposited, which is basically 500, and if your loss becomes 250, the broker closes your trade and you're out of the position. You lost $250, you're left with 250. So margin trading basically allows you to take a higher position trade by giving a very small deposit. And when it comes to the loss, whatever deposit you have submitted, 50% of the loss, if occurs on your account, automatically your trades get closed, and it's called liquidation. Automatically your trades closes out. Now, just to give you an example, what is the advantage of doing margin trading? This is something which a lot of people always ask, that why I can't pay 100% of the money. Why do I have to just use a smaller amount? Why cannot? Why can I just not pay 100% of the money? So let's say, for example, if you want to place a trade worth 8,500 or $8,000, sorry, not 8,500. Let's say you want to place a trade worth $8,000, or you're buying 100 shares, $80 per share, so total trade value is 8,000. Now there is a scenario. What you can do, you can put your money $4,000, and you can borrow money from the broker, which is 4,000. In totality, what you have done, you have taken a trade worth 8,000. How much your capacity was? Only 4,000. But because you can take leverage in your trading account, you are able to buy position worth $8,000. Why? Because here the broker contributes in your position. You borrow the remaining money from the broker, which is called margin money. And imagine if the price from $80 goes to 85. So you make a $500 profit. So now the value of your position, which was 8,000, is 8,500, because 500 is your profit. What do? You sell this, book your profit, give $4,000 back to the broker, and now you are left with 4,000 of yours and 500 your profit. You made $500 profit on your capital of 4,000. That's more than 10%, right? So imagine if you had just put $4,000, you would not be able to take a trade worth 8,000, and you would not be able to make a $500 profit. So the whole idea about placing a trade using a margin is, first, to efficiently use your capital. Second, uh, to diversify better. Using borrowed funds in your investment is not a new concept. Think about every time you want to purchase a car, or if you want to purchase a house. Even if you have the cash, you don't really want to engage into a cash transaction. You normally want to take an auto loan, or you want to get a mortgage to buy a house. Why is that? Why do you want to pay interest to the bank? Why not just pay them the total amount and save on interest? Because your expectation is that the money which you have, you will pay a down payment, and the remaining money you borrow from the bank, pay interest to them, and the remaining cash which you have saved and not put in that house, you can invest somewhere and it can grow, which will pay for your interest along with which it will provide you an income also. Meanwhile, using the bank's money, you can purchase the house and continue with your activity. So, the idea of employing loan or borrowings in your investment is to efficiently use your capital. Please remember this: the concept of wealth is not just about increasing cash. If you have cash in your bank account does not mean you're wealthy unless that money is not invested somewhere or it is not efficiently utilized. The concept of wealth also has to do a lot with efficient utilization of the money which you have. Today, if you have 200,000 dirhams lying in a bank where you are not able to generate any income out of it, if it is not put in use, it's a waste. It's a complete waste. Why? Because what we learned post pandemic we learned that in 2022 how much inflation went up. Every single thing which you used to be able to buy at a price X has increased, or you will be surprised to know that the price remains same but the quantity has reduced. This is also a form of inflation, that they keep the prices same but they reduce the quantity through packaging, through sizing or whatever. But this is something which is happening and we cannot deny. It does not matter where you are, what you're doing. You must know that inflation has kicked in and it has made things more expensive, and it can happen to anyone. And during that time, if the money which you have kept in your bank was not invested anywhere, you lost out. You lost the value of that money. So, money needs to be efficiently utilized. If you buy a house, right, and you're living in that house, it's 1 million dirhams, and you have paid cash 1 million dirhams. Now, the value of that house might go up or down. You never know. Maybe you don't want to sell that house at all. Maybe it's not an investment. So, what you normally should do, use a down payment, get a mortgage, and the money which you save by not putting in that house, you invest it into funds which will eventually grow, which can pay for the interest along with some sort of income. That is called efficient utilization of funds. Or if you buy a car which is 200,000 dirhams, you know the car is a depreciating asset. In 4 years, the value of the car is going to be down almost 60-70%. And with that, the cash which you have put also. But in the next 4 years, if you keep paying interest to the bank, meanwhile, put the remaining money somewhere where you can grow it in a much better and with a greater percentage increase. You can not only just pay for the interest, but also at the same time generate an income over it. That is the idea for efficient utilization of funds. That being said, I would not encourage anybody to take this. Does not, again, guys, this does not mean that you need to swipe your credit cards and fund your trading accounts. Please understand this. When I say employ debt in your investment, it means that you can take leverage on your portfolios, but that leverage needs to be calculated. You cannot go very aggressive. You cannot just put $500, take a $50,000 position. I mean, when you do that, it becomes a very aggressive form of trading. So today we are going to understand how much leverage is enough. What is a conservative leverage? What is a moderate leverage? What is an aggressive leverage? And we are going to take the live account to understand that how the prices of the products move, what is the range, how do we calculate the range and all of that. Please continue. If you have any questions, you can definitely ask and we'll try to answer you while we are uh, in the session. Next, very important concept, which is called short selling. This is important to understand also. Now, before we switch to the live platform, um, it is important that you understand margin trading and then you understand short selling. Short selling is the way how one can take advantage from the falling prices. Today, if I told you that oil prices are coming down 3%, 4%, you feel that oil is going to fall down further. How can you take advantage of the falling oil prices? Either you will say that, okay, once it has come down completely, I'm going to buy and make money on the buying. But if the trend is on the downside and if you're expecting it's going to fall down, what you can do, you can borrow oil from your broker or from a buyer who is already holding oil and sell it in the market. Once you sell it, hypothetically, you should receive some money when you sell it. And when the price comes down, use that money to buy oil back. But you will not be using the entire money because now the price has come down. So you will be saving some. That saving is your profit. You buy the oil back and give it back to the buyer from where you borrowed from. So short selling is the process by which you borrow a stock or a commodity or an index from your broker's inventory or from a buyer and you sell it in the market. Once you sell it in the market, you wait till the price comes down. And once the price comes down, you can buy it back at a cheaper price, keep the price difference, and give back the stock or the commodity to the broker or the buyer you got from. This is exactly how short selling works. So, in the online market, you can actually buy and sell live, and you can buy and sell live. uh, if you are expecting that the prices are going to go down, you can use a short selling transaction. If you feel that the prices are going to go up, you can do a buy transaction. Buying transaction is a traditional concept. We know that when we feel that prices are going to go up, we buy and then we sell it high. But what if the prices are already high and you're expecting it to come down? So in this chart, as you see, that you are the short seller, you're the person who's expecting that the Microsoft shares are going to come down. So you borrow 10 shares of Microsoft from your broker who has the inventory, and you borrow these shares from the broker and you sell it live in the market. 10 shares, $300 worth. And once the stock comes down to 200, you buy it back. Now, when you sold those shares, you receive 300. When you buy these shares back for 200, you are left with $100. That's your short selling profit, right? And when you buy these shares back, you give the share back to the broker where you borrowed from. So short selling means borrowing the product, selling in the market. Once the price drops, buying it back at a cheaper price and giving it back to the broker. You borrow, sell, buy back, give it back. This is how short selling works. Again, short selling is not a very old concept. Sorry, it's not a very new concept. It's a very old concept. In fact, a lot of people in the financial markets do buying and short selling. There are short sellers in the market who continue to sell uh, because their ideology is more bearish. There are investors who are bullish in the market. There are investors who are bearish in the market. Bearish investors are the ones who always feel that the markets are overpriced and they are going to come down. So their mentality is always be on the sell. As high it goes, always be on the sell. So whenever the market crashes, these are the people who make money. Now you can do it over a longer period of time, you can do it over a shorter period of time. It's up to you how much risk you are willing to take. Now, guys, I'm going to take you to the live platform, give you a small demonstration of how trades can be placed. And we are going to look through a few charts and see. First of all, we are going to go and see that what has happened today. Few important instruments which you can look. I'll help you to create a watch list as well. And then you can take the demo account completely and try to do it yourself, and will definitely help and try to give you an idea of how this works. So I'll take you to the platform live. Please, if you have any questions, and you can definitely write over the chats and let me know. Okay. So guys, please let me know if you can see the platform right now. I've just shared my screen. Please do write. If you can see my platform, it's really important for me right now to continue. So if you can see the platform currently, just write yes or okay, and I'll start the live demonstration over here. If you can see the platform, and I'll keep switching from screens to screen. So I'm just sharing my live screen right now, and it will help you to understand the platform also. And we'll go through different watch list and different products just to see that how it actually works. Just 1 second. Okay, perfect. So I'll just switch to the live platform right now. Here. Okay. And please, as and when, if you have any chats or queries, do definitely write here. Now, what you're looking at is the live platform. Of course, this account is a demo account, but the prices which you see, the prices, the live feed which you're looking at, it's these are the live prices, and we'll go through one by one to each product. First and foremost, we are also trying to bring some discipline into trading, and that's very important. I'm just going to close this right here, blank screen completely. And what I want you to do is have prepare a layout for yourself, right? How it can be done. If you go on home and click on this plus on the platform, there are different kinds of layouts, right? So this is first home, and then there's home 2. You can rename it, let's say charts layout. Right. In charts layout, what you need to do is uh, keep the charts open so that you can see live movement of what is happening. So this is NASDAQ right now. So I'm just gonna reduce a bit. Okay. And then I'm going to open gold. Click on the chart. Prices have moved higher. Okay. I'm also going to open slightly here. Yeah. Then I'm also going to open crude oil. Say Brent. And we'll see that different durations we are going to check that how much it has fallen down, and what is next. I'll put it right here. Okay. And then we are also going to add let's open a stock also, or let's say open a currency, for example, euro dollar. So we opened a commodity, a currency index, just trying to create that diversification. Euro has also fallen down a bit today. Right here. Right. So for now, these are different charts. Obviously, at this point of time, just to make sure that it doesn't look too cluttered, I'm just going to remove one, keep oil here, and keep gold over here, and keep somewhere around here. We'll keep the euro here. Or let's just keep two charts open, oil and gold for now, and then we'll go through different. So here, this is where we see there are different charts. I go back to home again. It's a blank screen. So here I can have my watch list. You need to have a watch list. So this account right now has $50,000. It is important that we must know the products which we need to trade, and we should, when I say we must know them like they are your friends. How much they have moved today? What is the news about them? You need to be interested in the product which you are trading. Otherwise, these are just numbers and tickers which will bore you. But you really want to do something, you really want to trade, then you need to understand that these are not just numbers which are boring for you. This is something which you need to know. This is something which uh, more you see the price trends, you'll be able to identify exactly how they move. So I'm going to make a watch list today. Live trading watch list. I'm going to add some products today. I'm going to add gold. I'm also going to add crude oil. I'm going to add S&P 500, which is the US market index. I'm going to add euro versus dollar, just traded a lot. And I'm also going to add NASDAQ. We'll add Apple shares also. We'll add Oracle. We'll add Nvidia. Sorry. Nvidia. Right? More or less. Now we'll create this watch list. Now watch list is created. I go to watch list, click on live trading watch list, which we have created right now, and make it bigger. Right. Here you must know that the products which you see can always be added. There can be more products, but right now I'm just keeping it very simple. Mostly diversification is what I would always promote. Always diversify, spread your risk into different products. Let me just add agricultural commodity like wheat also into this. Right, so I have a commodity metal, I have a commodity energy, I have a commodity which is agricultural based, I have a stock, Oracle, Nvidia, Apple, for example, and then I have euro dollar, I have Brent oil, I have S&P 500 stock, which is, what stock is this? Okay, this is a different stock. Let me just remove this from the watch list. Yeah, right. Let's understand the prices of these products. Gold. So let me add silver. I'm sure a lot of you are looking at silver also these days. Now, if you see gold, click on the buying price, you open an order ticket if you want to buy. But if you want to short sell, you need to select sell. Buy, sell. Buy is blue, sell is orange. So you need to understand the difference. Gold price right now is showing $2,516. What does it mean? It means that 1 troy ounce of gold is currently 2,516. Gold is valued in dollar per ounce on a international level. In Dubai, you will see the price of gold is in dirhams, right? In India, it is in Indian rupees. In live market here in US market and US exchanges, it is in dollars. Most of the online platforms which you use to trade, they have gold in dollar terms only. So you must understand this is a 24 karat gold. There will be no physical delivery of any stock or commodity or currency which you buy here. It's an online platform. So everything remains digital or virtual. You see the gold price, see how fast it is moving, buying and selling, right? You see how the price tickers are moving. That is called volatility in the market. Fluctuations can be really high or can be really low. So you need to be careful when you place a trade. So now we understand how it is priced. Gold is priced dollar per ounce. 1 ounce is 31 grams. So when you write in units, 1 unit, that means 1 ounce of gold, which is equal to $2,515. Followed by Brent oil. As you see that oil has fallen down around 4% today. Currently, it is showing $69.58. $69.58 per barrel. One barrel is roughly 160 liters of oil. But again, in US market, US or European market, for example, it is priced in dollars per barrel. So oil has fallen down almost $3 today, and it is a big fall for a commodity like oil. $3 in a day is not a normal fall. This is important, guys, to understand that how much on an average a product moves. So gold, for example, moves around $20 to $30 these days, right? If you see the lowest price of gold today is 24.99, highest is 25.20. It's already moved up around $20 when you talk about low and high. As compared to yesterday gold closed at 2506. Right now it is 2516. So as per yesterday, the movement is just 0.3%. But if you see today itself, the gold has already moved around $20, right? So this is something which we need to know, that how much a product moves. This really helps you to plan your trade also, right? Let me just check if there are any questions so far. Okay. Please continue to write if you have any questions. I'll be there with you, giving you an idea about what we do. Now, going back to the platform, this is gold, oil, and then there is an index called S&P 500, US 500. It's an index. Index gives you an aggregate performance of the market. So when I say US 500, please remember this. US stands for the country whose market you're investing in. 500 indicates the number of companies which are in that index. So index, if it is up, which means the 500 companies on an average in that particular basket have performed well, so it's going up. If it is down, which means most of the companies in that index, they are not performing well. Or when I say not performing well, which means the stock prices have declined, and that's why it's down. You can buy index in terms of its units. So one unit is equal to $5,477, and you can buy or short sell an index. If you feel the US market is not going to perform well, you can short sell the index. Then we have shares like Apple, Oracle, Nvidia, whose prices, as you all already see, are moving as we speak. Now, let's try to plan a trade. Today, if I want to do an intraday trade is a day trade, what happens over a day, right? I need to see the price movement of gold, okay? This is, I'm showing it for you. I track gold every day and it is in front of my eyes. So I have seen in last 6-7 days, gold movement has been between 2480 to 2530. This is what I have observed when we have when I normally see gold. And how do I track gold? You're using the watch list. You can do that also. This is free of cost. Can just take a demo account and always keep a track of this. Now I will show you the price chart for gold. Let me increase the size. Price chart is nothing else, it's just how gold has moved. Normally, when you wear a watch or a whoop or any tracker in your wrist, on your arm, it kind of measures your pulse second on second, or hourly pulse, or heart rate, or whatever. This is exactly how this chart is. On the right side, on the vertical, it shows the price. On the horizontal side, it shows the duration. Okay, it shows the duration. June, July, August. So currently we are looking at a daily chart, which means every candle over here, it represents one day, right? And this candle represents what? OHLC. Opening of the day, highest of the day, lowest of the day, or the closing. So every single bar represents one day. If you see this thread on the top, which means it shows the highest. If you see this thread on the lowest, shows the lowest, right? If the candle is red, which means it opened at a price but closed much lower than the opening price. That's why the candle has gone red. If the candle is green, which means it opened at a price X but it closed at higher than their opening. So that's why the candle is green. Wherever you see the green candles, it shows that gold prices closed higher than their opening price. Closing is very important in an online daily market. Every single product has a closing price, and this closing does not only happen in a day. A lot of traders who want to trade short term or want to do quick in and outs, they reduce the duration of the chart from 1 day to sometimes 1 hour. In that case, every candle represents, instead of a day, it starts representing 1 hour, right? Now it shows you the highest of that 1 hour, lowest of that 1 hour. It shows you that the opening and the closing of that 1 hour. For example, this red candle, it was formed at 5 p.m. today. And at 5 p.m. when it started at a price of 2513, and after 1 hour it ended at 2506. So that's why it has turned red. The next candle, 6 o'clock, started at 2506 and ended at 2509 at 7 p.m. The next candle started at 2509 and now it is going towards 2517. So this candle is green. So every candle which is green, which shows that the closing of this candle has been higher than the opening, right? Why it's important? I'm going to take you through the price movement here. Okay, now look at this. A lot of you will see, and I'm just looking at this particular time frame right now. More I zoom out, I go back. So as I said that I've been tracking uh, gold prices from last few days. So let me take you through the beginning of the September, right? When you see the beginning of the September, this is 3rd, 4th, 5th, 6th, and then again 9th, because 7th Indian markets were closed Saturday, Sunday, and again 10th. If I were to identify the range of gold, let's say here and here. So there have been major breakouts which were here. This formed their own range, right? Right here and here. But if you see, there was a lot of resistance at this price, 2506, 2507. And there was a lot of support at this 242490. It broke this support, went down all the way here, 2474, and again bounced back. So just want to run this by you. Just look at this. It's very interesting. Let me see if I can add. I'm just going to use something to put it right here, a horizontal line maybe. Look at this level here and then here. See. So this line here and this line here, both are same level, 74, 73. See how it has bounced back from this level, right? These are called reversals right here. And the prices from where it touches and bounces back are called support lines, right? So if you see, they have very strong support lines over here. And then these are your resistance lines over here, from where it is not able to break. And once it breaks, it goes higher. So this I'm showing you the movement of gold from last few days. Now, because I have to take an intraday trade, so I will reduce this duration to a 30 minutes chart, right? And make it much more about today. So from yesterday till today, this is how gold has moved, right? Somewhere around here. This is, you see, every 30 minutes, this is how gold has moved higher. And again, if I want to get a broader picture, what I can see right now, that here, see this, a buying should be most likely on a support price, which is this 2492, right? Look at this line. Again, it's not perfect. So there is something called a support zone. I would call this my support zone. On a short-term chart, look at my support zone. Between 2486, 2492, this is my support zone. This is where when gold prices are coming down, they're bouncing back, right? And bouncing back to, first of all, if I see a short-term resistance, one was here. So let me tell you, resistance can be multiple. What is resistance? Resistance is when the price reaches to a point from where it cannot go higher for some reason. It touches that price and comes down. This is called a point of resistance. But there's a time when resistance gets broken. When? Look at this. So this kind of formed a resistance here. If you see this line, let me make it a slightly okay. Yeah. Here. Somewhere around 2500, right? It kind of became a psychological resistance that it was not breaking 2500. It would appear over here and then again here. And the moment it broke, it would reach to this level, right? Which was 2520, which also, by the way, became another resistance, right? Look at this. It's not able to break now 2520. It has broken in the past. If you go zoom out, you will see, look at this. Look at these zones. They have become resistance zones over here. See. Look at this zone right here, right? It's not able to peak. So this is 25, 26, 25, 29 or 25, 31 it reached to. Not able to break these peaks, right? Look at this peak, this peak, this peak, this peak here, right? Today, gold is 2514 right now. Again, very close to the first resistance. Ideally, a sell should be around 2519 or 2520. A short selling position should be placed on the basis of this resistance, where a stop loss can be put either $10 higher. So if you're selling at 2520 or 2519, a stop loss should be kept slightly above this resistance. So resistance is at 2526. You can keep a resistance at 25, you can keep a stop loss at 2530. So I'm putting $10. Now $10 means that whatever units you take, you multiply it by 10. That is the amount of loss which you will have. So if I open my order ticket right now and select a short sell, if I short sell right now, it may not be a good idea because the resistance is around 2520. So there are two things which I can do. A lot of impatient traders or somebody who is looking at the market gets an idea that the price of the gold, the strength is not there today. So, just sell on rise. I, on the other hand, would suggest the traders who are beginning their journey, always select limit orders for day. So instead of entering into the market right now, click on this limit and let's say you put 20 units, or let's say, 20 units, or say 10 units. Let's not take too much leverage. 10 ounces will be gold worth $26,000. I have 50,000 in my account. So 10 ounces, select sell, but you keep the price. You don't want to short sell right now. It's better if it goes to 25.19, which is today's high and a resistance, and you keep gold to sell for that resistance. If the gold prices today reaches to 25.20, most likely it may not be able to break that resistance and comes down. So what you do, you not only keep the limit order, but also keep it for today. So you select today. If today the gold price does not reach to 25.20, day ends, your order should end. Tomorrow, get up, see the trend again, take the trade again, right? So we are going to do two things here. First, we are going to keep an order. Here, 25.19, keep a stop loss, $10 up, which is say, or $11 up, 25.30. And also I need to keep a take profit. So my take profit should be my support. Now support from here is 2500 or 2499. This is right here, from where it can bounce back again. So I will put 2500 as my support. So now my profit expectation is 190. My loss expectation is 110. In fact, I want to make it 2531 just to not keep it at the round figure. So my loss could be $120. My profit could be 190. So my profit expectation is higher than my loss. That is how it needs to be. I confirm, place my order. Now I have placed a limit order in this case to see if it gets hit. We still have a lot of time. The markets would close around 12, 12:01, and we still have the time that our trade could be placed. So this is one way. Just check the questions. Okay, no questions so far. Please, guys, if you have any questions, continue to write and just understand what we are doing here. If you have any doubts, please do write. This is one thing, right? Now, another thing can be done in the same trade. Right now, as you can see that this candle right here, it went till here and again came down, right? Now, because trend for today has been mostly on the downside, uh, we have seen gold prices touching again 2520 and coming down. Now, I've already placed the order. Now, my expectation is if it goes to 2519, touches that price, a short selling position will start. And if it starts coming down, I will make profit. But if it goes up, then I'll make a loss. But if you see in last few days, gold prices have not been able to cross 25 here. See this peak, it has not. And my stop loss is somewhere here at this level, right? So that's why I've kept my stop loss slightly higher than my resistance, because if you keep it at this peak, it might just touch your stop loss and comes down. That's going to sting a bit. So I keep my stop loss a little higher. As I said that I've kept the order. Now, if we'll try both the things, we'll also sell in the market right now just to see that what if the price comes down. Ideally, I would suggest wait for your trade. But since we are doing a demonstration, I'll also click a sell here. And 10 ounces, for example, sell it in the live market. Keep a take profit again at 2501 and put a stop loss slightly higher at 25.25. Here, similar $120, $130 profit, $130 loss. And but because I'm taking a trade right now, that's why I have kept my stop loss a little higher. It will be very close to my resistance, but then my risk appetite is very rigid. So I don't want to lose more than my profit. So I confirm the trade, place my order, and now I have taken a short selling position. How to see this? I go to account, click on my positions. Here, while your watch list is here, now this is where you have placed your trade. So you have short sell at 25.11. Obviously, here, if you ask what should be the right thing to do, as per the current situation, the right thing should have been what we did already. Place an order at the resistance. If it gets hit, okay. If it does not, then just wait. A very common mistake which a lot of traders do, in spite of understanding the risk, that they feel that we are going to miss out on the opportunity. This is the trend which is, this is where gold prices might come down, so might as well just sell now because the trend is down. I am a strong believer that your entry and exit should be planned as per your support and resistance, right? So right now I've placed the order. If the price comes down to 24.99 today, we should go for a buy because that's where the support price is. That's where from where it touches and bounces back, right? And I'll keep my stop loss below 24.92 or below 24.86 because those are the another buying support level. So when I'm doing an intraday trade, I'm strongly looking at the charts and nothing else, because the big time fundamentals are for long term positions. And right now, when I'm trading in stocks or commodities, mostly for a day, I would want to see the daily trading ranges rather than thinking about a long term perspective, right? So that's why I'm looking at a 1 hour chart. Could be looking at a 1 hour chart, 30-minute chart. This is max what we should be looking at when you're looking at a day trade. I'm going to keep this chart aside. And now I'm going to back to my watch list and look at oil. Oil, which has fallen down 4% today. Looks horrible at this point of time. 4% down. Now, if you see the price of oil also, look at these red candles. And I'm going to show you a 4 hours candle, which will give you a slightly longer term perspective. Look at this. Look at this. Like, oil prices have been on a decline. Look at this downtrend. It has a very sharp, very steep decline from in the month of September itself. was $80. Now it is down to 69. A big fall of $10 here. Of course, a lot of fundamental reasons for that. Mostly fundamental reasons for that. And if you see this, see, this is where the support line was. See, ultimate supports have been broken here, right? If you see, not even, see, and this was 2024, the beginning of the 2024. If you see this, look at this key support level 76, 76, 76, 76. Now, when it broke 76, it's bleeding right here, right? Now, if you see further down, let's say if I select 1 day and go a little more back just to see where the next support might be. It shows here, and that also seems to be broken at the moment. Look at this. This used to be 71.9 and also has been broken. So for now, oil continues to fall. This is what we call, guys, sell on rise. But today, oil has already fallen down 4%. It's already down by $3. So there is a technical called average true range. Average true range is also known by ATR. And we click on ATR and we look at the daily movement on an average right here. It shows around $2.3, right? So this tells you the average range of oil. If you see, there have been peaks of uh, 2.7 also right here, somewhere around $3 also. But on an average, if you see, it's around 2 to $2.5. And today, oil has already gone down by $3. So I would not sell right away at this price because a 4% decline in 1 day, it is anticipated that there might be a retraction because it is just testing this break support, right? If this support here, it's already, if it gets broken for another 1 day, because this is a chart which is I'm showing it to you from last 1 year. If you see this and if it completely gets broken and there is no bounce back, then we might see a downtrend starting in oil. But at the same time, today, if it climbs back here, then we might see a slight recovery back to these 75 levels, right? But again, this is on a very long-term chart. If right now I would see a 30 minutes chart, in 30 minutes chart, it moves around 50 cents. So if I were to take a short-term trade in oil, right now, on a 30-minute basis, it is already down. I would wait to sell it, and my selling point should be, so as you can see, multiple times this support and resistance has been broken in a short term. Look at this, for example, right here. See, this channel has been broken. Then again, if you see this channel right here, this has been broken slightly on the higher side. Right here, this has been broken, right? So oil should be a sell on rise. From here, if it recovers back till this particular channel, which is 71.9, so you can put probably a order at 71.9 to sell it again, because currently right now it appears short, right? There is no motivation that why we should buy. The only motivation should be because it has fallen down around $3 today. If there is a 50 cents or a $1 recovery, you could make money over it, right? So we are going to take that chance, and just with 100 barrels, click on buy 100 barrels and confirm and place our order, right? Click on close, 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 and go to our positions. right? So I'm short on gold right now. I've bought oil, but again, the only reason to buy oil today is it has already fallen on 4%. So a recovery of 50 cents could make $50 profit for me, and I would want to exit at that. So I can also place my target here, modify my trade, put a take profit of $50. Also keep a stop loss of $50, 1:1 risk reward ratio. Because this is one of the asset class I'm trading in. So now my stop loss and take profits are in place. Moving on to a index. Just check if there is any questions over here. Okay. Guys, if you have any questions, please let me know. I'm sure that this is for the first time a lot of you are looking at, but definitely we can always have more and more sessions like this, and you can always look at. So if you have any questions, please write now. Just try using your Q&A, and if you have any questions, you can definitely ask while we are conducting the session. Yeah. Now, here we are short on gold, buy on Brent. I'm also going to go to the index, which was on my watch list, and S&P 500. Today, S&P 500 is down by 0.5%, right? If I see the chart, this is slightly a long-term chart. You see right here, look at these double tops, one top here, and then again a top here, and again a fall, right? With a slightly long-term, but let's say I'm looking at a 1-hour chart right now. On a 1-hour chart also, see there's a consistent fall right here. Ideally, if I zoom out a bit or take a smaller duration, 30 minutes chart, it seems like a fall. It is already breaking. So I should short sell probably at the current market price, which is here, and keep a target here. So let me just draw a line. Look at this right here. This is support which has been broken already, and now it's bleeding red, right? So from here, even if I would zoom out a bit, yeah, you see that the next target should be around this, which is 5406, right? Currently it is right now 5451. So we should expect slight decline again from 5452. So today's low is 5435, highest is 5500, which is 5498. So there is already a movement of $70. Now either we keep slightly target around this 5406, but as we know that this is slightly more than the average range, a possible fall can be also around this area. If you see right here, look at this area, 5437, which is also close to today's low. So if we are selling it, ideal sell would have been around this level, 5453, right? So you could sell it around those levels and wait for the target to come at 5437. So let's say I will sell now around 10 units, which is equal to, let's say 5 units, which is equal to $20,000. And every time I'm placing a trade, I'm not using my full value, 27,000. I'm just using 1%, which is 272. Click on sell, confirm, and place the trade, right? And since I'm sell on the markets, see the biggest problem with short selling is that when you sell, you expect prices to come down so you can make money by buying cheaper. But what if the price goes up? Then you are in a loss. So you need to always keep a stop loss, because you don't have a cap that how high markets can go, right? So because today's your target should be around 5437, it has already come down a bit. So we'll keep a take profit target of 5437, which will be around $30 profit here. And same for the stop loss. Never keep a bigger loss than the profit which you are anticipating. So let's say slightly higher because it's very close. Let's say slightly more. And let's say my take profit target also, then I want to make it slightly bigger because my stop loss is bigger. Perfect. Now modify this. We'll just wait for the prices to come down. So now I'm short on gold, I'm short on S&P, I'm buy on oil, right? Again, each of my trades have a stop loss and take profit. It's very simple. I put in my account $50,000. My total trade value is $60,000. Right now, I'm on a very conservative thing because the products which I'm trading are not conservative, but at the same time, I have put my stop losses. So my losses are already accounted for. If the price reaches to those points where I've put my stop loss, even when I'm not looking at these trades, my loss will be booked. So I have to understand the 1% rule that if I have put $50,000, I should not lose more than 500 in a day. That's called the 1% rule. That's the most conservative rule. That if my loss reaches $500, I must stop all the trades and wait for the new day to come. Because if I make sure that I do not lose $500 in a day, it will take 100 days or 100 trades consecutively for me to lose my entire 50,000, right? Now for that to happen, of course, it's really bad luck, but then the chances of that happening is slightly less. So it's a game of probabilities. So I want to make sure that my losses do not exceed the 1% of my total account value. So I've put $50,000. I don't want to lose more than 500. So I'm putting my stop losses accordingly. I'm keeping my quantities very low. Just a question over here. What is the fundamental reason for oil to sell so much? See, this is something which has been going on. Oil prices first. Oil prices have tanked on account of low manufacturing. US being close to recession. That is one of the primary reasons that why. Because otherwise, the way Middle East tensions were, it more likely was to be increase in the oil prices. But in the last few data, less number of jobs being generated, manufacturing being suffering, uh, even from the Chinese side, we have observed that has pushed oil prices down. In between, there have been a lot of delay also. I think somewhere I was reading real quick. Let me just give you an idea here. We're just checking the oil chart also. I mean, it did come at a multi support level, but I think recently there was, yeah, weak demand from China. Despite the US supply disruptions caused by the tropical storm, concerns over global oversupply of oil has continued to pressure the market, and that is something which has been troubling. But the reason why I have bought oil is very simple. It has fallen down by $3 today. So this is not something which normally, on an average, happens. So the target is just 50 cents. So even if there is a slight recovery, it will help the portfolio a bit. So that is what we are doing. And as you can see right now, currently the small green in oil we can see. Again, it's turning red. So this is 100 barrels. If there's a 50 cents movement from here, we might see a $50 profit. Again, guys, quantities should be depending on the risk which you are willing to take, and the risk which you should be willing to take must be calculated. When I put $50,000, it will allow me to place my trades worth 5 million because I just have to use 1% of every trade value. But that does not mean that I should be doing it because that's going to be an extremely aggressive form of trading. If you have put X amount, your leverage should not exceed more than 2 or 3 times. And if you're doing day trades, they should always be covered by a stop loss, or there has to be a market neutral strategy which should be in place, right? So, and you have to understand the average range. Like for now, why I have bought crude oil? The reason buying crude oil is it has already fallen down so much. Does not make sense to sell it right away today. If this price continues for today, Then I close my position, and tomorrow there will be a new day and we might see a bigger fall. So we'll start again tomorrow. But for today, it makes more sense to be on the buying side and again keeping a stop loss. I've bought oil, but I've kept my stop loss at 50 cents down. So from here, if market falls further, my loss will be booked and I'll be out, and then I'll wait to see that if there is going to be a recovery on the higher side, because in the month of September, oil has straight away fallen down from 80 all the way to 69. So somewhere that there is a recovery, because there is still a problem of the supply. Um, there is still a OPEC meeting coming in. So there are a lot of factors which could push prices higher, and this volatility might continue. So whenever you see that the daily percentage drop is higher than usual, should wait. Either once the price goes up, you can sell it again, or you can buy now and take advantage if the price recovers a bit. So that is something which can be done, right? So, and again, guys, there are a lot more factors when we are doing day trades. This is something which is, I mean, it's a constant practice, of course. Just back to answering a few questions here. Let me just stop the screen sharing, get back to the slides. Are the margin in all brokerage account pre-activated or to be requested to the brokerage? So the margins are already pre-activated. Every time when you place a trade, it is mentioned that the margin will be used, and you can see the margin on the product overview. So with Century, every time when you, even when you open the account and you become a client, we always sit with you and explain you how the platform works before even you place a trade. So, and we touch base on all the dynamics of the trading, whether it is about oil or gold or index or some sort of strategy which can be executed. There are a lot of market neutral strategies. I did one session on market neutral strategies in the previous week, and we'll continue to do more sessions in the coming next few days about US elections and investment opportunities and ETFs and SIPs, from long term to short term to a lot. So it's going to be an ongoing journey. What I would recommend is a lot of you can actually take a demo account from your relationship managers and just place a few trades. At least the ones which we have done, just track them. See, at this point of time, it does not matter whether the trades go right or wrong. What's important is that you should form a habit of creating a watch list and seeing the prices every day, day on day, day on day, day on day. When you keep looking at them, not even trying to memorize, but when you keep looking at them in your mind, a sort of band forms in, which allows you to take a decision more consciously, not even looking at the charts. It's just like when you go to a supermarket or a grocery store to buy groceries, because you have done this so many times over so many days, you know when the price actually changes. So if you're buying broccoli and you have seen that it costs you X amount, the moment that price increases in your next visit, you would know that this is expensive. Or if it comes down, you know that is cheaper. That is exactly how markets also work. That is a vegetable market, this is a stock market. It's not that different. It's all about demand and supply. Of course, there are external factors which do impact the price of all these commodities and indices, but then it does not have to be this complicated. Leave the factors which you cannot control. You cannot control wars, you cannot control earnings, you cannot control anything. What you can control is yourself, and create a form of discipline. Start the watch list, put some products into it, and start looking at these products. If it goes out of your sight, it will go out of your mind. There is no way how experienced you become, how many certifications you get. Even if you're a CFA, you're not looking at the market every day, that certification means nothing. So please form this habit, create a watch list, and start looking at these prices, whether it is gold, oil, stocks. Just have a glance. 5 times in a day for 10 minutes, just give it a glance. You start with 20 minutes observation, it will reach to 50 minutes, 1 hour. 1 hour in a day just to over a different interval. 11 a.m. is when Europe and UK opens. 1 o'clock, a lot of economic data comes out from UK and Europe in the afternoon. 4:30, a lot of economic data comes from US in the evening. 5:30, US stock market opens. 12 a.m., US stock market closes. 3 a.m. Japan opens. So whenever these openings and closings and data are coming out, have a glance at what is happening to the prices. right? You will get to know. I mean, there is a whole economic calendar also. Last when we checked the fundamental analysis, I explained how you can see the news in the economic calendar. Obviously, in a 1 hour session, we cannot cover a lot of things, and that is why we keep individual one-on-one sessions. If you're interested in either of them, go talk to your relationship managers, and I'll conduct a one-on-one session for you, and we'll sit and understand in a much more explained and detailed way that how we can put trades and how we can try to make the best use of the available levels, right? So once again, I hope that this session was fruitful to you. Please review us on Google. Do maintain a trading journal. A trading journal allows you to buy and sell whatever you buy and sell. Please try to record the reason that why you have purchased, fundamental or technical either. But you should maintain a reason that why you are buying or selling. That allows you to stop doing unnecessary trading. Unless you have a reason, do not trade. Either it's a technical or a fundamental. Please bring a reason when you trade. So, guys, once again, please review us on Google, Century Financial. If you liked our session, we'll have one more session tomorrow, and for the next few trading days in September, we'll have a session every night. I see a lot of you have joined from day one. You continue to come, and thank you so much for your support. And those people who have joined new today, do come tomorrow. We are going to have another session for tomorrow. Maybe I think tomorrow it's on European Central Bank and the interest rate decision, and we are going to discuss what will be the impact, what is the strategy which you can use, and how you can. What is the fundamental understanding about interest rates and what Europe has gone through, and now what's the next course of action. So with that, I'll take your leave. Thank you so much for your time. My name is Yogesh. You have a great night, and we'll see you tomorrow, same time.